I'm more good than I am bad. I work it out, I What's up, guys? How's everybody doing? Got my buddy up here. I'm going to get to this in a second. Have a little bit of an agenda today. Not so much of an agenda, but just some bullet points that I want to touch on because I think from time to time, trying to get this hair in control. I think from time to time my streams can get a little bit all over the place. We go off on tangents, right? How is everybody doing? Can everyone hear me nice and clearly? Let's go through the chat. Just give me a sound check. Give me a sound check real quick. Okay. What's going on? What's going on? Once I see the first response with regards to the sound, I'll go through the chat. Hey, 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 hey. Hey, hey, what's going on? Whole fire move last week. Yeah. It's been a crazy past few days. So sound is good. Ibrahim, I'm assuming that you're saying yes to the sound being good. I already see I have a nice little hat mark. Got the hat marks going on. Okay, sound is good. All right, so we have a few people in the chat. Let me just say hi to everybody. You got a bunch of people in the chat, actually. All right. X Factor. X Factor starting off with the chat with an entire novel you've written. An entire novel. What's going on? Cornholio, what's up, man? Sorry that you lost your number one spot for the last 3 videos. I feel like you've had the number one comment, or the first comment, rather. I can't speak to the quality of the comments. I'm just fucking around. Yusuf, what's up, man? Happy New Year. Well, not there yet, but almost. I think that everyone would be fine if we actually just closed the books on 2020 right now and got 2021 started already. Okay, what's up, LP? Merry Christmas, Happy Holidays. I hope everyone had a good version of whatever they celebrate. I celebrate Christmas. It was actually really nice, but it was just long. So my wife has 2 families. You know, her parents have been divorced her entire life, and they have big separate families. So it makes, holidays are a lot to juggle, whether you're married or you have a significant other, because you always have to dedicate a fair amount of time to both sides, right? Which, if you're, again, it doesn't matter if you're have a boyfriend, girlfriend, if you're married, means you're going to take multiple trips a lot of the time. So my wife having 2 families just made it a 3-day process rather than what is usually, okay, one family gets Christmas Eve and then the other side gets Christmas Day. So it was a long 3 days, honestly. It was a long 3 days. I wasn't active really in the market at all on Saturday and yesterday. So, and I don't even know if I was really active on Friday, honestly. I placed a few hedges, but I don't consider those to be. I don't consider that real activity. No outright positions. Okay. What's going on? So yeah, Christmas was good. Christmas was good. I got all the things that I needed, which is not really much. I got nice pairs of thick wool socks, and because it's getting cold here. What else did I get? I got a really nice, actually, set of paintbrushes because I wanted to get into painting again. Just as something that is a hobby, painting with acrylic and oil. So I got a nice set of those. What else did I get? I got a bunch of clothing. I got my wife anything to do with horses. I got her a bunch of breeches and things for the horses. So Christmas was good for both of us. Okay, what's up? What's up? What's up, Dave? GG. Okay, D Ross connected. What's up, Sweet Canary? You feel like you need a cocktail, D Ross? I feel like a lot of people deserve a cocktail, right? After all the action that Bitcoin has put in. It's a little bit of a celebration, right? A little bit means a lot, rather. Adrian, Aaron, what's up, buddy? What's up, my man? Okay, Randall, what's up? Okay, 1 thumb down. I don't know what that's all about. Happy Festivus. That's the best way to put it. Any Seinfeld fans in the house? Jason, what's going on? Luna, who'da thunk? Bitcoin, oil. Yeah, 2020, right? The year of Bitcoin going down to like 30, what was it, like 34 or 35K. And then all the way back up to, what did we hit, 28 something? And meanwhile, oil goes negative. So for anyone who thinks that XRP can't go lower, just remind yourself that this year oil went negative. X Factor, market profile. Yeah. Thank you, man. I appreciate that. So we're going to get A Banks in there too. We're getting A Banks in there. I'm going to be sending him a link, so A Banks will be joining the Discord if he chooses to. I don't know if you use Discord, A Banks. A Banks, I don't want to dox you because we'll get into who A Banks is. Hey everyone, okay, finally back. 2 weeks of hell. All right. Okay. I think I'm going through the chat right now. Wow, we have a lot of people. Keld, what's going on? Sigmar, let me just pull this over here because, all right, wait 1 second. Okay, let's not do that again. Come on. All right. Dubs, Nate. Okay. Happy holidays. Happy New Year. PS5 won't allow me to trade NFTs yet. All right. AP, what's up, AP? Okay, cool. I got a few of my friends in the house. All right. AP, what's going on, man? Maximo, Nate. All right. Okay, cool. I think I said hi to everyone, and I can't do the roll call forever because, of course, we'll just be stuck here. We have a good amount of viewers, and for those of you that are new to this, my name is Ryan. I also go by Cantoring Clark on Twitter. For the people that just become familiar with me, I've been trading now for 14 years, but I've been trading crypto going on 4. A lot of people who find me on Twitter, they assume my name is Clark, obviously for obvious reasons, but my name is not Clark. That's just the name of one of my wife and I's horses. So, Cantoring Clark, that is me. My partner is Josh Rager on Twitter, and we are the co-founders of BlockRoots. So we have primary focus being market profile and order flow, but I think it's a great place for trading and investing education with primary focus on trading. So we are on YouTube. We're trying to establish ourselves as your non-sensational crypto market, news, trading related, investing related educational hub. All right. And when we say non-sensational, that's because a lot of the more popular YouTubers, they really just go off of the sensationalist bullshit, right? And I am completely, I promise you will never see my face on a thumbnail. And I always joke about that because the crypto YouTubers, they love to put these, these faces that are filled with emotion to attract your attention, and I don't know, it doesn't really improve the content whatsoever. It really just plays off of really stupid responses that people still have, right, to faces like this and some ridiculous Bitcoin price prediction. We don't need to do that. We could stay completely calm while we analyze the market without really playing to that garbage. So there's a few other really popular crypto Twitter accounts that have made a transition over to YouTube, and I always like to highlight them. Friends of mine, CryptoCred, him and Donald have a great channel. I think that you could. I think that it's your job if you're whether your first time interest in trading or you've been a seasoned trader. I think that your whole entire life has to be. You have to operate under the assumption that you always have something to learn and that you're forever going to be a student. And I think you should always have a diverse set of sources when it comes to learning. So take advantage of all the free information that you can. All right, I don't want you to just stick to this channel. I think that there are plenty of other great channels. I think that crypto YouTube for a long time was kind of a cesspool. So CryptoCred, Young Talopa, there's a few other guys. I can't think of them off the top of my head right now, but they're worthwhile. They're worth following as well. Okay, so we're going to get into the stream. There's a few things that I want to highlight. Like I said, I do have a certain set of bullet points. I always ask this in the beginning, and as much as I don't want to do this, YouTube does prioritize people based on the amount of likes that their videos get. So, there'll be some times when I watch a video, and honestly, I'll watch a video on YouTube, and we know how that turns out. It becomes like a fucking YouTube black hole. One moment I'm watching, recently I'm watching a video on, when I get into anything, I really jump in head first. So I'm watching a video on all these paintbrushes. Sounds stupid, but my one of the gifts that I got was a set of really nice paintbrushes, and paintbrushes ain't cheap, so I don't want to mess these up. And if I'm gonna spark up this hobby again, I want to do it the right way, and I want to learn as much as possible about it. So I'm watching, videos on the paintbrushes that I have, right? The round, the pointy, the fan, and then the paintbrush video turns into a video on, I don't know, you name it, right? You get into one YouTube video, and then the next thing you know, you're in a completely different subject. I couldn't even name something right there because I was actually pretty damn focused, which is a pat on the back moment for me. But either way, you watch these videos, people put the time into them, and even though I really love the video, I sometimes forget to like the video too. But, if we are trying to, in this sort of democratic fashion, put the best sources of information, front and forward, that's really how we go about electing those particular accounts. We hit the like button because the YouTube algorithm prioritizes based on that. So it's not for the dopamine. I don't see one video that has 100 likes and then another video that has 150 likes, and it's not like there's some type of linear progression in happiness that's based on that transition, right? It's really just that we want to anything that we get involved in, we want to be exceptional at, and we think that for the work that we put in and the information that we're giving out, that it deserves to be prioritized. So all that aside, right? Go ahead and hit the like button. If you're not a subscriber, I think it's right around here. There's a watermark near my left shoulder. And go ahead and subscribe to the channel because we also do give away a lot of Bitcoin. And I think this year we've given away at least a Bitcoin, right? In giveaways, and if you think about it now, the money that we gave away in January and February, that has grown substantially, right? So in this YouTube, we're going to give away 0.01 BTC as well. Okay, we'll do that at the end. All right, so let's see some of the comments, and I'll get into some of the things I want to touch on. BTC price is already absurd enough with any crazy predictions, isn't it, Randall? It's absolutely insane. Yeah, I love it. Mr. K, it's all good. Yeah, I'm actually into metal music. I like Amon Amarth. I like Lamb of God. I have really a eclectic taste in music. Really diverse taste in music. Okay, so I think that's good. Jesus, could you have just said like the video, please? Oh, Oliver Crane. Ooh, Oliver, no talk like that in here. I control the stream. I could boot you out. Okay. Sorry for the diatribe, Oliver, but that's how I roll. So either get used to it or find a different stream to watch. Okay. So the first thing I want to touch on is Phemex. Obviously, we're partners with Phemex. So if you go to Phemex.trade, you'll get a reduced trading fee. I think right now it's around 10%. All this stuff adds up. But as I have to say, Josh and I, we are direct partners with them. We don't just share ref links, so obviously we are compensated. So if you go to Phemex.trade, though, you have a chance to, I think right now it's still win a Tesla. So you still have a chance to win a Tesla, and you do get those reduced trading fees. And if I look at my trading fees now for the last year, it's absolutely absurd how much money I've actually spent in just transaction costs alone. So that's our, this is, again, we've been partners with Phemex for a really long time now. It is the fastest crypto exchange there is. So 300,000 transactions per second, that's their matching engine speed. So they have no downtime. They have a feeless spot trading model. So, if you're trading on Coinbase, you're paying a ridiculous amount just to take liquidity, right? So and I think you're even paying a maker rebate as well. So you're not receiving a maker rebate, you're actually paying to provide liquidity as well. So if you pay, I think it's $19 a month on Phemex, you get spot trading completely free. And that pays for itself very quickly, especially trading Bitcoin. If you're in and out of positions, it absolutely pays for itself. So the first thing I want to touch on, I shared this on Twitter this morning. All right. Parzival. Okay. So you could find him at Parzival, I believe _85. Okay. And this is, I'm not going to dox him, but this is a lifelong friend of mine. One of my best friends, extremely experienced from traditional markets. Okay, it was actually, he doesn't even remember that he's the one who, I can't remember if he introduced me. I said this morning it was Bitcoin, but I think he might have been the one who introduced me to Ethereum. I'd been involved in crypto, and I had just kind of just gotten involved and figuring my way around, and I think he was the one who actually put me onto Ethereum. So I think I incorrectly said that on Twitter today. But this is one of my best friends, and he is, like I said, extremely experienced. So I think that you absolutely should go on Twitter. I shared him on my profile today, and give this guy a follow, because I know that if anything, everything that he's going to be putting out is going to be something worth paying attention to. All right. And no, I'm not saying he's putting out a product or anything. I'm just saying that, you want to be able to identify on Twitter you want to be able to on Twitter be able to sift through the signal and the noise. And he is someone that is absolutely worth following. Okay, you don't have over 10 years in traditional markets as a portfolio manager for the amount of money that he was managing and not have anything to say for it. All right, or not have anything good to say. Okay, and now that we have this sort of merger with traditional markets, and it's becoming more obvious every single day, I think that it's absolutely important that you have some perspective on those markets as well, and not just for myself. All right, so go ahead and if you go on to my Twitter, you'll go ahead and see that I shared him, so you could give him a follow. So first things first, all right? I want to talk about the trend, okay? Because obviously we're all aware where the higher time frame trend is. Let me just pop the chat out so it's a little bit easier for me to see and move this over, because some of you were complaining about the tape being distracting in the last stream. So yeah, so we'll get this chat. Okay, good to go. All right, so a few things I want to talk about. I want to talk about the higher time frame trend. Okay, we're obviously going to get into a little bit of the lower time frame. We spend more time on that on Wednesday. And then I want to talk about a particular asset that I got back into. And to a lot of people's disappointment, I got out of it earlier, right? I got out of it maybe about a month and a half, 2 months ago, and I stated why I was getting out. I stated where I would get back in, and lo and behold, I am back in, so I want to share that with you right now. Okay. Your first introducer to Bitcoin. I read all thread. Yes. So in regards to the higher time frame trend, you're going to see a lot of people that are pointing out price-derived indicators. Okay, so we're looking at a moving average, for example. You see people talking about the faster period moving averages, the slower period moving averages, something like your 10, your 20, your 50, your 100. And these are, what we're looking at right here, are just basic MAs. So moving average, it's an arithmetic mean of whatever period setting you have it set to. So here's the 9, here's the 20, here's the 50. So it's the average price of the last 9, the last 20, the last 50 bars. This is a really useful tool. Okay, I think a lot of the times people think that because of this is so widely available and so easily shared, that it becomes a meme that people act like this is not useful and that you can't create a system off of this. There are CTAs whose entire strategy in long-short portfolios, or rather with long-short portfolios, or if they're trading not portfolios but actual trend following certain commodities, they will rely on, or rather you could actually trace their approach back to some more primitive methods of using moving averages. So moving averages are very valuable, but they are just a derivative of price. So we're just seeing, based on the candle closes, already what has occurred. So it's nothing that's predictive. It's just descriptive. Okay. So a lot of people will incorporate some type of crossover as a strategy for entries and exits. So if you have something like the 9 crossing over the 50, and we're on the the daily chart, this means the 9 daily crossing over the 50 on the daily. That could be an entry signal, right? And then you could look for maybe the exit signal being the opposite of that. Now, these are useful in trending markets. I think that they're going to become a lot more useful now because we're in such a strong trend. But they do also offer a lot of false signals during the trend as well. So, this entire period within maybe the larger context of a bigger range was a trending period, but you could see that throughout the structure there were plenty of crossovers that gave you sort of this false feedback. When I'm looking at the moving averages right now, I would say that they're best used as dynamic support and resistance levels. Dynamic meaning that they change. So you could see that the 9 period MA right now is at 24.6. You could see that the 20 period MA right now is at 22.2. And then the 50 is at 19.986. So they're dynamic because those are going to change, right? If we get a major movement in price, if price moves sideways, either way, it's going to incorporate into the average that is derived from that price action, and it's going to give us a new number. But the idea is that this should act as support, right? That these moving averages could act as support if we revisit them. And that's because in a faster moving trend, these areas are going to be seen as, and I'd say that it's better off on the daily, and on the weekly, you're looking at something like a 20, a 50, and a 100. Not the faster period one, not the 9, not the 10. These areas are going to be seen as dip buying opportunities. So your 20 period right now is at the 2020, at the 22,200, and your 50 period is at right around 20,000. All right. So the idea is that there might be, upon a revisit to this level, a sort of systematic bid. Okay, and that might be something that is actually manually applied, but it is applied in a systematic fashion, meaning that someone is following along with this visually and they're saying, okay, I'm going to buy that, or it's actually applied in a, an algorithmic fashion, in that it's systematic, but it's executed by some type of automated trading system. So, price comes back to the 20 period, price comes back to the 50 period by XYZ. And the idea is revisits back to these areas represent times where the trend has cooled off. So that gets to a point that I want to touch on, which is, we are starting to see that based on the moving averages being pretty wide apart now, and the fact that we are pretty extended from even something like the 20. So if we get rid of the 9, you can see this is your 20 period moving average. We are kind of extended from it. We've been kind of extended from it. And many times before in previous bull markets, we came back and revisited that level. All right, mucked around there before returning upward. So we are extended from that moving average. We are pretty extended from the 50 period moving average. If you look back at previous bull markets, we've pretty much stayed above the 50 period moving average most of the time, all but for a few cases where back in 2017, back in 2016, we returned to it pretty violently. So I'm not saying that when I look at moving averages like this, I'm not saying, okay, we have to revisit them, because you don't have to revisit these by falling to them. You could essentially just revisit them by price moving sideways enough, right? If price moves sideways within a range, this is just going to catch up. And then if that bid is there systematically, well, then when we touch that area, you're going to see some type of response. Drinking a Cafe Americano right now. So we are pretty extended from these moving averages. Now, it's really important to understand context, though, because the moving averages don't move price. It's the other way around. So it's not the fact that the moving averages are extended that mean we have to come back to them. It just might dictate some of the behavior of participants, right? When people see that we've been consistently extended over time, okay, maybe I'm not looking at this as a potential area to add to my position. Okay, I'll consider adding to a position maybe when these begin to compress again. So if you have the 50 and the 20 begin to catch up, or I'll consider adding if we revisit. So right now we're pretty extended. And if you look back at previous periods where, the 20 period moving average on the weekly, absolute value buy opportunity, we are very extended from that right now. So here's the 20 period, here's where we currently are. The last time that we interacted with that was around, I think, 200% ago. Okay, so we've made almost 177, 180% move off of that. That was the last time we tested that as support. And if you look back during the previous trends, you have periods where you got extended 123%, okay, 200%, 155%. So the moving averages to me are not something where I'm just going to be looking at these now and saying, okay, this means I have to long, this means I have to short. It just gives me an idea, if anything, of where price has gone a little bit overextended, right? So it's sort of like if you were looking at Bollinger Bands, and I'm just leaving a few pieces of information off the chart, because the 20 period moving average, if we put on Bollinger Bands, it's just the center line of those Bollinger Bands. So if you get rid of the 20 now and the 50, you'll see that the line stays the same. So if I put the 20 on, you can't see it because it's that line right there. So Bollinger Bands, all right, it is useful for determining levels of volatility, right, for determining the strength of a trend. In this case, in a strong trend, you're going to spend most of the time at the upper standard deviation band, which is one of the outer bands to the upside, and the opposite is to the downside, obviously. But more often than not, you're going to revert to the mean at some point. Now, it's hard to say when we're going to revert to the mean, right, because there's no hard, fast rule. right? There's no rule that says, okay, we have, exceeded all the other times now to the upside where we've extended from the 20 period. Now it means that we're in sort of uncharted territory and you have to expect a pullback soon. It doesn't have to be that case because remember, one of the most important things is context. The difference for this entire structure versus all of this was all retail driven. This was all sort of speculative mania by retail participants. And this is the first time over here where we've actually had a very strong systematic institutional bid where you've had the major players come into the market. And in a retail driven market, you're going to have a lot more volatility. In a market where there's an institutional presence, there's just that much more of a chance that an institutional bid will provide a floor a lot sooner. So if we're expecting 30%, 40% pullbacks, if there was one case amongst many where you might not see any of that, well, where would you place your bets that it might be? Would it be during the period where the institutions were there or where it was just retail driven? So now we have an institutional bid. I would say, if anything, this might be the occasion where we stay overextended, right? This is if you're looking at, one of the more basic tools, right? Something like a moving average. You're going to see a lot of people also share RSI, okay? So the RSI, and let me get rid of the funding indicator. The RSI just measures, the RSI measures the change in upward movements versus the change in downward movements over a period of, over whatever period setting you have it set to. So for the most part, it's going to be out of the box, default setting will be 14. That is your standard RSI setting. So it's going to be the change in upward movements versus the change in downward movements over the last 14 periods. Now it's going to be indexed to 100. So you're going to see that it's going to swing anywhere between, right now we're at one of the highest levels we've ever been. So around 90 and then all the way down to the windows of this are 70 and 30. The middle ground is 50. But you're going to see that this is going to be either considered overbought or oversold, right? And we're definitely overbought right now by RSI standards. Now, remember, that is by the standards of the indicator. It doesn't say anything for what price has to do. So people can look at this and say, okay, maybe this will influence my trading decisions. And again, in a retail-driven market, maybe that'll have more of an impact because you sort of have this self-fulfilling nature to things because the market is technically driven. You have people going off of technicals, and if you have enough people looking at the same thing and saying, okay, yeah, that's pretty overheated, maybe I won't bid as much, well, price tends to fall on itself over time when you have less of a bid, right? So if you have more people acting on the same sort of information, you're going to get the market moving based on that. So right now we've been very, by RSI standards, very overbought. Okay. Now, this is a tool that is actually better used in ranging environments. Trend following tool is a moving average. A range trading tool is something like a stochastic RSI, a regular RSI. So in a strong trending market, there's actually always going to be divergences. Because again, remember, this is based on the change in upward price movement versus the change in downward price movement. So anytime you have a big, strong movement up after you had a sideways movement, it's immediately going to go to overbought area. And then anytime you have consolidation afterward, it's going to reset. So as long as the moves that follow, so as long as this move here is shorter than this move here, and this move had a greater magnitude, this is always going to show up as lower. Okay, so it's always going to show up as an RSI divergence. So you get some people now that are sharing this chart and they're saying, okay, here's the last high, here's where we currently are. Okay, here are the highs from this structure, here's where we currently are. This means that, momentum has shifted to the downside. Well, that's where we currently are though, right? This move is smaller than this move, and they're both coming off of consolidations. Okay, so after price moves sideways for a prolonged period of time, any move in the RSI is going to drastically overthrow it, whether it's to the upside or to the downside, depending on the move. So make no mistake, you're going to see a lot of, I think on crypto Twitter, pretty much everyone wants to have an answer right now. You're going to see a lot of this sort of looking for clues in some of the more common indicators, and it doesn't have to mean anything, right? It doesn't mean that price has to drop. If there is some institutional bid right now, a 5% drop, a 10% drop, all of those are going to be, again, they're probably going to be systematically bid. So it's not going to be, it's not going to be Michael Saylor watching the chart. It's not going to be Scaramucci watching the chart. It's not going to be who else is now getting involved. It's not going to be maybe BlackRock, right? They're not going to be watching the chart to get involved. They're going to look at sort of these opportune moments where maybe price has a larger standard deviation move to the downside. Maybe they define it as a 5% move, a 10% move, and it's just going to be bid, right? All of these opportunities are going to be seen as great value opportunities to get involved in something that maybe they have a 10-year projection on, a 5-year projection on, a 15-year projection on. They're not cost sensitive to what goes on around here. Let me look at some of the comments. So just to be quick, these tools are things that you're going to see commonly used, right? The moving averages, the RSI, I've seen them pop up on the charts recently, and it's just people looking for answers right now. I think the one thing that we always have to pay attention to is positioning, right? So these are based on, so the RSI is based on a candle close, right? The moving average based on candle closes. So all of these indicators are just derived from price, right? So we could see that this was a bigger move than this move, all right? So you know that when the moves are getting smaller, okay, so from here to here, from here to here, from here to here, right? We know that momentum is beginning to shift, okay? So we could see that with the naked eye. There's no reason that you need to look at an indicator to see that. Some people do. Sometimes it helps and makes it a little bit less subjective, right? The most important thing that I think that we always have to pay attention to is positioning. Okay, so I actually started getting hedged recently. I think that there's a strong January effect in traditional markets where after the calendar year, after 2020's closed out, we expect that in traditional markets there will be a good amount of movement to the upside in January, right? This is something that is a seasonal thing, right? For the most part, you always see this response in traditional markets, bar a few cases where there's been, obvious things that do not show that evidence. But for the most part, traditional markets are moving up in January. Crypto, right? If we're looking at Bitcoin on something like the Bitstamp chart, there's really only one January where we've moved up instead of down, and that's actually all the way back here. So that's this January, and then we go back to something like where we are now. Nope, never mind, because that was March. So this was one of the only January periods, January to February, where we moved up. Every other period, I think, bar that one, was a period where of price action where we were moving down. Okay, so I think that the Bitcoin actually does behave, that it does follow previous cycles. I think it follows them pretty tightly. And again, as the best way I could put it, in almost uncanny fashion. This extended move going into the end of December, so December's not closed out yet. Not everyone has closed their book out yet. This move going into the end of December like this, now starting to show signs that maybe longs are getting, again, a little bit overheated on futures. And then Bitcoin historically having a pullback in January, I think it is setting up for the same thing to occur that we've seen prior, where history doesn't repeat, but it does rhyme. So we put in from quarter, let's just look back at this quarter alone. So almost a 200% move. So I'm looking at this right now, and I'm looking at things like, with exception to a few cases in the past 24 hours, the basis between the spot market and the futures market has gone from being, for the most part, on these moves up. You've seen that futures have been trading a consistent $20 to $30 premium. Towards the top of this structure, we've actually seen that it's been anywhere from $50 to $100 at times. So what I'm talking about is, if you look at Bybit, if we look at Coinbase, that's a spot market, and this is a futures, a perpetual swap. What we're seeing is that there are many times where Bybit is trading, $50 more expensively than something like Coinbase, than something like Bitfinex, than something like, Gemini. So that to me is an indication of overheated positioning, right? You want to see that in this spot-driven cycle, that spot continues to carry most of the weight. So the times where spot is no longer carrying a lot of the weight, coupled with the fact that we are quite overextended, right? We look at some of these other traditional methods. I think that that's time to be a little bit cautious. There's a lot of euphoria in the air. There's the idea that now it's just going to trickle right from an overperforming Bitcoin to now an Ethereum, and then to the alt cycle without any kind of recourse, or rather any kind of downside action. I think that that's just, I don't know. I think that's kind of a lofty expectation for the market, and it has really, it has put in an incredible. It's put in an incredible past year, right? And that's awesome, but at some point, even with an institutional bid, I don't think that you're not going to get a really violent, albeit it might be short correction. It might be a very short-term correction, but I think that we're going to have our violent corrections regardless, right? They might not last as long. The opportunities might not be there as long as they were in 2017 and 2016, but I think they're ultimately going to come, right? And I think that they're best expected in periods or around periods where you do have the futures market getting quite overheated with relation to the spot market. So if we look at something like the funding rates, these are predictive funding rates. So let's go to the current funding rates. Predicted was, I think it was around 10 basis points for Bybit. Right now, the funding rate on Bybit is 11 basis points. So, that I am partially hedged right now, and I'm actually making a lot of money just collecting funding on Bybit. So I'm actually making, I did the math for the last, since I started hedging, I won't even say how much I've actually made through hedging, but you could, if you imagine how much spot, I have compared to what I'm hedging. I'm trying not to reveal too much. I'm being careful about what I say. But, you could make a substantial amount of money through just funding alone when it's elevated, right? If you imagine that 10 funding periods at, those are separated by 8 hours, so that's a pretty decent amount of time, but 10 funding periods at 10 basis points, that's 1%. And if you're hedged 1-for-1 and you're delta neutral, 1% of your portfolio, that can be a substantial amount of money depending on how big your portfolio is. So we have signs that things are getting kind of overheated, and they're getting overheated fast. So I think that it's completely normal, as I've said, for the market to be moving upward and have that basis, right, where funding is positive, where futures are trading at a premium. But once we start consolidating and it begins to pick up, that's when I get a little bit worried. So this morning we had market open. So let me just put on the sessions so you can actually see them. They're right here, but I'll put on the session volume. Then I'll look at some of the comments, answer some questions. After open this morning, so leading up to New York Open, all right, so leading up to New York Open, the market was moving up, and then upon New York Open, there was no immediate carry. And in that period, right, where price moved up, I think 50 basis points, so 0.5%, in that period, funding went from being 1 basis point on Bybit to predicted funding being, and then actually rose back up to 11 basis points. So I forgot, it's not predicted anymore. Predicted funding is slightly lower, but it went from 1 basis point to 11 basis points, right? In that 50 basis point move, okay? So I think that, again, everyone is very bullish. You're getting a lot of people that are chomping on the bit on perpetual swaps, and that sets up for these flash crashes, right? And I'm going to say flash crashes now moving forward because, again, these dips might not be that prolonged. But what we're seeing is, again, just a sign that a market is maybe getting a little bit ahead of its skis, okay? Now it's kind of normalized. I would say that if you look at Coinbase now and if you look at Bybit now, there's a $23 premium. That's normal, right? Especially at these elevated levels, you have to remember that those percentage differences are going to change, right? So the difference between 27,119 versus 27,100 is not the same as if there was a $20 difference back in 4-digit price territory. So that is something to consider. You have to normalize these, right? Okay, so I want to look at the comments before I get into what we're looking at today and give you maybe some direction as what to expect or what levels to pay attention to. I just wanted to touch on the higher time frame stuff in the beginning. The trend is extremely strong, right? There's no denying that whatsoever. The trend is extremely strong. We have the first case of value overlap right here. So you had value migration. Now we have value overlap. So yesterday's value area, we have an inside day structure. I'll get into that in a second whenever we after I look over the chat. But the trend is very strong. It's just it's by our standards, which can be completely blown out of the water in a new market regime. Based on previous standards, the trend is quite overextended, right? It's look at the chart, take the log off, look at the chart, put on the weekly. This thing is just, there's really, like I said on Twitter the other day, in completely unadulterated fashion, This is fucking nuts, right? This is it. It is fucking nuts. And one of the things to point out is actually, and I'm not trying to be the bearer of bad news or say that this means anything, but this is the closest thing we have so far to the beginning of a blow off top. So whether that means we pop up to 30 and do that, again, it doesn't mean we have to do that, but it's the first time, and it's always worth paying attention to evidence, right? You have to adapt, right, to what you're seeing. And if you're starting to see signs that maybe you're getting a blow off top, it pays to start paying attention to those signs, right? It doesn't pay to bury your head in the sand and act like, 50K by the end of the week. I see people posting, 50K, 40K by middle of January, and that'd be awesome. That'd be awesome for all of us, but I think that those kind of lofty expectations, they can set you up for disaster. So let's look at the chat. Let me pop this out over here. All right. Okay. All right. Nothing about stocks, but I should buy Bitcoin. All right. Followed. Please say it was Dot. We'll look over Dot. Okay, for sure. All right. So ETH going. Okay, so Demir, ETH moving up to February for CME listing. As I said for the last 2 weeks, completely long ETH, right? Want to be long ETH. Me personally, what you want to do, that's fine, but I want to be long ETH until the open. Opinion on that, we are almost at the total market cap top. I think it's worth pointing out. I think you just reminded me also, it's worth pointing out that open interest is very high as well. We're seeing open interest spike on some of these smaller moves up. So absolutely dem. Publicly available aggregated funding and open interest calculators for TradingView, could you recommend? Yeah, I recommend Coin Analyze. So Coin Analyze. It's awesome to see this guy become more popular as of late, because he's actually the person who built the Clark indicator. So if you go to individual charts, we'll just go to, let's pick the Binance perps. Go to indicators, aggregated CVD, aggregated open interest, aggregated funding rate. So this is coinanalyze.net. Let me post this in the chat. I'll just use this link right here. Okay, pasting that in the chat. There you go. Do you think institutions will exploit trading opportunities in an altcoin season? I think so, D. Ross. I think one of the things you always have to remember is that institutions of, so depends on how you define institution. So institution is like, people a lot of times assume that the term institution applies to just massive institutions. Institutions can just be a hedge fund, right? A small hedge fund that is, managing a long-short portfolio, right? An institution can be a hedge fund that is doing stat arb. The problem is when institution gets applied, the term institution gets applied to like the idea of like sovereign wealth funds and pension funds, which is what I think of real institutions as. So institutions are probably already, some form of an institution is already more than likely involved in DeFi. The limiting factor in a lot of the altcoin opportunities is the size, right? So it's the same reason why like the basis trade existed between Bitcoin, or rather in Bitcoin, excuse me. My words this morning, I didn't drink enough coffee this morning, guys. I went with green tea instead of coffee. This is my first coffee. But, so not that sharp. But size is a limiting factor, right? So if you're a big player, you can only throw so much at these small illiquid assets without becoming the market. And I was referencing the basis trade because for a long time there was this cash and carry trade, which still exists with Bitcoin spot and Bitcoin futures, where you could sell the futures that are trading at a premium, buy the spot, and basically just capture that free yield. So institutions are limited because, again, there's only so much you could put at the market before you become very obvious and before you actually moving the market too much and really snuffing out these little pockets of alpha. So I do think that as the market grows, the logical progression would be, as the market grows, bigger players come in. Just as a reminder, like, they can't just jump in. They can't just jump in. Okay, good morning. What's up, Stan? How's it going, buddy? Dot. Okay, so I'll look over Dot. Look over Dot. Was thinking we'll blow off at 30. Yeah, okay. Good stuff. All right, ExoCharts is a way to get letters for TPO. Yeah, you just go into your settings. But you have to change, so as a reminder, the resolution is going to be important. So you have to change the tick size a lot of the time to even be able to see the letter. Otherwise, if you're zoomed out too much, it's all going to compress and you're not going to be able to see the letter. Hate to be the guy to ask anyone in chat know if there's anything we got to do for the giveaway. You got to answer the question I ask at the end. The first person to answer correctly wins. Of course, happy to show that. All right, yeah, well, that coin analyze I pulled up is the coin analyze. That's why it came up in my history. But in case I missed something, Ricardo, thank you for that. You always have to be careful, honestly. Okay, so do you see any future for old things? I think a lot of the old stuff is out of favor now. So there's so many cryptos, and that's a problem. There's a lot of dead assets that are ghost assets that, unlike equities, can just continue to trade until they could continue to trade, and exchanges won't delist them as long as they have volume because, hey, they're making money. All right, so go ahead and share some tickers in the chat, and I will definitely go over those. I want to take a look at the lower time frame action. All right, so first things first, we'll go to my Bybit chart. And for those of you that wonder why I chart Bybit right now, in my opinion, is the home of the apes. It is I think more often than not, it is one of the leading exchanges. And since I'm paying attention to most of the information with regarding to flow from Bybit, some of the better trading setups that I get, I just got into the habit of charting on Bybit. So this the past few days, right? As I said, we had periods of value migration, right? Strong trending day, big, somewhat balanced day, and then today we have this inside day setup. So an inside day setup meaning, yesterday's high, yesterday's low. I think that one of the better defining features of an inside day setup is when you really get into the more atomized approach of paying attention to where the value accrued. So we have our complete day basically inside of yesterday's value. So yesterday's value being where 70% of the trading activity took place. And as I said, before this high was put in, what did I say? You don't want to take short opportunities until there's any kind of range that looks like it's beginning to develop. So one of the first signs of a range developing, you have a high, you have a low on high volume, and you have somewhat of a balanced day. And then most importantly, you have a profile that is respecting the prior day's value area. So value overlap, respecting the prior day's levels, and for the most part, spending most of the time within the prior day's, like I said, value area. In this case, it's an inside day. So if you're trading candlestick structure, I think you get that you satisfy that stipulation as well. In this case, it's a little. Some people might go off of candle open, candle close. I like to focus on the value area. Right? So I like to focus on where most of the trading activity took place. And in this case, we're looking at the volume profile. So this right here is where most of the trading volume took place. So you have levels at 21,671, 26,580. All right, weekly open right down here. So far, I mean, after, if we look at this on the weekly right now, just to see where I got some of these levels from, I have my weekly opens marked out. So weekly opens marked out right here. If we go down to the daily structure is marked out. So we have this daily low that coincides with, or this is the daily open, but this is the low of yesterday, the daily close, excuse me, coincides with the weekly open, obviously, yesterday being Sunday. And then daily structure down here, the next cluster that we have, that also is a previous value area high for this composite down here. So I have just a few levels that are left on the chart, right? We have naked points of control down around 25, so 24,940 and 24,450. Remember, the naked points of control, These are just points of control in prior days that have yet to be interacted with that you can expect might offer some level of response if we should visit them. So the important areas I have on the chart are, again, this whole box down here was a prior value area for this composite. Okay, this is the break and retest that led to expansion. All right, this is pretty much a vacuous structure. I don't want to say it's completely vacuous, but there's not a whole lot of structure within these last 2 days in this trend, other than these points of control. So the naked points of control, again, right around 25 and 24,500. Now, I think the most important levels are within this inside day setup. So losing the weekly open, obviously no brainer, would not be good. If you lose the weekly open though, and we're able to reclaim that, I think that the market is so strong right now that you should take any kind of opportunity where you spike below a significant level and then show strength in reclaiming it. So meaning, hey, let's say we spike the weekly open, we reclaim the weekly open, and then you're looking for a trading opportunity back to something like today's meaty area, which is right around the point of control, if that opportunity came, right? I think that if you gain acceptance below the weekly open, you don't see a significant response. I think that essentially at some point we're going to get some type of significant mean reversion. And again, it might be a very short-lived, fast and violent one, but I think that we're getting to that point. It's just, again, we haven't seen the market really spike up and then spike down and have any kind of major correction like that where you ran into a tremendous seller up to this point, except for this. But then prior levels have rolled over, right? So maybe this was the spike and we end up having a rollover with this, like everything else, where it's been, futures market getting pretty overheated. Who knows, right? But the most important levels, I think, right now, considering this day is developing within the prior day's value area, I would say are around the high. Again, you're looking at, 27,700 is probably a reasonable area to execute off of, meaning that if we're able to gain acceptance above this level, you're looking for a trade, obviously back up to the high. I think it's kind of a no-brainer. So 27,700 back up to 28,400, and then probably further than that. So everything is, I think that anything that goes towards a high in this market is overextending. So my sort of, my MO with this market is if we gain acceptance above this level, the trades that I take into price discovery, so previous all-time high, which happens to always be yesterday, right? Are with a trigger trailing stop. So if we gain acceptance above 27,700, right, 27,671, have this inside day break, right, end up breaking through yesterday's value area, I think that you get overextension through the high. So I would say trigger trailing stop, maybe $100 window right there, and it's in case price makes a move through this level and rips upward. In that case, my trailing stop will be moved with it. I don't want to place a hard fast take profit in price discovery at the highs, right? I'll put a hard and fast take profit if we're stuck within structure. So if we're like, if we are, for example, let's say that we gain acceptance through yesterday's value area low, we have that inside day break setting up. Yeah, I could see the trade from 26.5 down to the lows, right? So back into these single prints, I could see that short-term trade setting up. I wouldn't want to, sell an inside day break setup outside of value with the expectation of that trade being the one that takes me lower. I would honestly rather miss the big moves rather than hold for them, and just trade my level to level within these areas. So even if that means 26,580 down to 26,228, doesn't sound like a big trade, but if you add up my small trades for the last month, you could make a lot of Bitcoin doing that. So if let's just say, and I want to talk back about the hard fast take profit, let's say we break through this level, all right, we rip down, and then we're back down at a significant level around the comp, that daily level around 23,850. In that case, if we start basing out around here, let's say that I see long opportunities set up, I won't be placing anything but, I won't be placing trigger trailing stops at the next significant area. So if this becomes the next significant resistance, so let's just put it on the 4-hour. Here's the next resistance. If we base out here, let's say we rip up here, I'll just take profit here, right? And then I'll treat this again as a range reacceptance play, where if we come down here, move back up into this level, let's say we reclaim this weekly, I might get a little bit aggressive even before claiming the value area again. If we're back within this range, even from a crude standpoint of just being the lows of this chart right here rather than the value area, if we're back within here, then I'll look for, okay, the opportunities that set up from low back to high, right? And then, you know, play it again if we gain acceptance above this value area high, right? Maybe we have another third day within here. If we gain acceptance back above this value area high, then the trigger trailing stop would come back into play if we're at if the last level that's a target is price discovery, right? Is sort of on the cusp of price discovery. As long as we're between levels, I think it makes sense to play the levels, right? Especially when you're starting to, you should group these things by, you know, I don't know. I would say there should be, every setup should be mapped in, or should be graded. This is the best way to put it. Grade your setups based on what category conditions they fall into. Okay, so the setup when it occurs, when we are neutral funding, when we've gone through a period where maybe price was trading, futures were trading at a discount to spot. Okay, that setup maybe has a lot more likelihood of further follow through than the setup that is approaching maybe the same type of target, but hey, now the market is 2-3 days into a pretty overheated futures market. All right, so maybe in that case, our setups really have to be to the first target and not with much expectation afterward, because the problem is, you know, when you don't take profit, if you're expecting higher, and let's say it moves higher, you might be the last ride before the bigger dump, right? And then you're exiting, you know, in a, you're sort of exiting in a very hasty fashion. You're getting out at market, you know, you're slipping a few $100. You know, if it's the final move before a bigger correction, you might not leave with anything, right? So these levels that I have drawn on the chart, just to reiterate where they come from, here's the previous composite, those days combined. Okay, we have a trending day that's not a really strong structure. I think, again, you could look at previous high volume nodes within that trending day. So if we're just zooming in right here, not really a high volume node though, right? It's a high volume node with respect to excuse me, with respect to the single prints, right? But, you know, we've come down and tested that already. So market tested. This is a really good low, but it's not exactly a low where, you know, if we look at this day opened, so let's just expand this day and then expand this day. So this is all one sort of revisit to this area. So don't forget, you know, it's not like there was an overnight gap. You know, the market opened and moved up. It's not like we had two separate profiles that visited this day or visited this area. So as a reminder, just always remember that. So we're looking at, let me get rid of this. We do have a good low down here. I want to get rid of that. I don't know why that's there. We do have a good low so far. But, you know, as I said, there's really not much structure into this area. Weekly open is down here. Market has done a good job of rejecting down here so far, so meaning the market came into this level, buyers bid this up very quickly, that we didn't spend much time down there whatsoever. This is it's excess at the low on the TPO and excess on the volume profile so far. So it's not like we've seen that towards the low there's been any kind of increase in activity or reason to think that maybe sellers were getting accepted, period. It's been, like I said, you know, I don't want to start the stream off making anyone think that because I wanted to point out the tools in the beginning that maybe people are using that are saying we're overextended, but the market is being bid up every time. Like it's very obvious the market is being bid up. It's just a matter of are the crypto native derivative platforms getting a little bit overextended, right? And is that spot market continuing to rise as we go from the low to the high? Is it suddenly the case that the spot market just pulls off? Which that is the case, right? We did start to see that. But, you know, this is what I'm looking at. The last 2 days. So here is completely within yesterday's profile. It is a pretty symmetrical profile. Again, inside day setup, right? No reason to call for low. No reason to be. Oh, I think no reason to be overweighted towards downside yet, right? At least we have this setup to go off of. Another thing to point out, though, right? Structure's been so clean. These little structural flips that you're getting, you know, you could trade these little consolidations all day. And the purpose of using a trend reversal chart is that it cleans up the structure and it makes that so much more, it makes it so much of an easier process to do that. But, you know, what we do have is, again, the market is, let me just zoom out to time-based chart so I could get more on. Open interest is, again, rising pretty rapidly. So open interest is rising pretty rapidly. If we combine open interest with delta, you can see it shows you the longs and shorts. So we'll take off this, put this on, and you see we have a market that is again it's getting pretty long, right? Don't want to be doom and gloom, don't want to provoke any fear, but we are seeing those, not flashing red lights, but let's say an amber alert, right? The amber alert is starting to flicker. All right, so open interest being high, this is not something that we might necessarily have an idea of what a ceiling is yet, because this is a new market regime. Previous market regimes, we would say, BitMEX being over 1 billion, hey, that's a cause for concern. If you're stuck in a consolidation and you're starting to see things like positioning indications of futures being overheated, okay, so open interest at that point, we might expect that the purge of that open interest might not come from a short squeeze, but maybe those longs being squeezed. So that's something to keep in mind, right? We're starting to see open interest again. It's at 977 million contracts, and that's on Bybit alone. I think it's well into the billions combining all the exchanges. So yeah, let me look at the chat, see what tickers we have. I want to go over one thing before I get into the tickers that you guys are sharing. If you're sharing 4 or 5 tickers, I'm going to look at the first one. So I'm not going to go through 4 or 5 tickers that you guys share. So just to keep that in mind. Okay. So yeah, I see a question here. I often hear about not taking a trade at the point of control. Can you elaborate, please? So yeah, one of the distinguishing factors is, though, the point of control within a longer term range or within a continuation pattern. If you have, let's say we're looking at the past 2 days. So we'll look at the past 2 days, session volume. You'll probably see the point of control is somewhere in the middle, fixed range rather. So point of control. Normally the point of control, which is right here right now, you would say is not a good opportunity to get involved at, because it's where buyers and sellers, it's where fair value is. It's where buyers and sellers are in most agreement. If this was within a higher time frame range, and this is more towards the middle of the range, it's the same idea as it not being a good risk reward area to get involved, period, because you don't really have that much certainty as you do at the extremes of the range where you normally see imbalances occur. That's in a ranging environment where you can get a little bit flat-footed. At the midpoint, at the point of control, it's pretty ripe with liquidity, so it's very easy to get into position, right? Which makes it very tempting because you just have, liquidity on the bid and on the offer. You have size there. But again, you don't have much certainty, because if you approach the low of a range, the high of a range, and you're in a mean reverting environment, you have a little bit more, I guess, there's more merit to saying, okay, we're approaching the high, we see a shift in momentum again, we see a sign of absorption, okay, this is a good area to find a position that mean reverts back to the center, right? Same as the inverse, move towards the low. If we're in a balanced structure, okay, we look for the same behavior that happened previously, sign of absorption down here, sign of a loss of momentum by sellers, okay, we're looking for buyers to take back over. The midpoint is just kind of no man's land. It's flat, right? There's no level of imbalance there to be expected. If anything, it's the most balanced area. So when we're looking to get in position, we're looking to get in on imbalances, right? Or where imbalances occur, so that you can, have these you could ride these moves off of those levels. Whereas the middle is kind of, it's an easy area to get involved, but there's no good area to define risk, right? If you're getting involved at the midpoint of a range, how do you define the invalidation to your trade? Okay. If let's say you think this is a long, are you going to put your stop here? Well, what if it is a long, but price just needs to move sideways further, right? It's not a good area to define positions, okay? Now, that's in a ranging environment. I think that in a strong trending environment, if you look at a flag, it's more often than not that the point of control is going to be around the midpoint of the range that develops, the consolidation that develops, and then, yeah, you could make a case for, if the structure has higher lows within it painting, then maybe this midpoint, this point of control, is a good place to get in position, especially if it's below you, right? If you see something like this developing over time, and you have the point of control down here, that's really good, right? Longs would be more likely in control than shorts. This is a base down here, and then you could say, okay, we have higher lows forming. This is maybe a good continuation pattern to take advantage of. Maybe I'll put my stop below, this low, right? Whereas if you have a structure that's forming like this, and the point of control is up here, most of the volume was transacted at the highs. If you're at X, you have 3 rejections at the highs. Sure, you have higher lows, but most of the risk was put on at the highs. Most of the volume was transacted at the highs, and we've been unable to close through the highs. So if most of the risk is put on here, and you're trading down here, well, then shorts are in better position. And we always want to identify who is maybe more than likely in control in whatever situation we're looking at. So longs would not be in control in that case. If we're looking at this structure, yeah, the point of control actually is towards the lower end of this, which is good. Okay, so there is a case to be made for, again, this just leading to continuation, right? And you can say, and you could maybe reasonably get involved here, but you'd have to define your risk in kind of a messy way, right? So it's all about how you can define your risk, right? Can you define it in an attractive area with relation to where you sit? So last thing, before we get into some of your charts, I was talking about this a while ago with Josh. Josh was the one who got me into this. I bought down here and I sold for, I think it was an either 7, 8, or 11%, 11 times gain. I can't remember. Let's just say 7. We don't want to LARP and say 11, right? So I sold this for 7x. Got involved down here. I'm pretty sure that I sold around 13. So I might be 11 times, because I think I got in around one penny, a cent. So I bought down here, sold up here, right? Price went to rip all the way upward. I was not in that at all. The further up it moved, the less confident I was about it either way. And I said, okay, more often than not, when you have a structure like this, Bitcoin hasn't done anything tremendous yet, right? It was the beginning of what has been a higher time frame trend upward, but hadn't broken through the major levels yet, hadn't broken through the all-time high. There was a lot of overextension in the alt market. DeFi was heating up, but again, a lot of things were already pretty overheated. So what goes up more often than not will come down. I've looked at 99 charts, and you might get one chart that continues to move up and leave this as an area that you'll never look at again unless you're looking at a log chart. But 99 times out of 100, I don't know if I said 99 times out of 10, this is coming all the way back down to the floor. All right, and I said this. I said, I'll get back involved in Shroom when it comes back down to the floor. And we begin to show a sign of basing out. Now, a lot of people the entire way up were buying here, they bought here, thinking that it's going to just V-shape reversal. There's no reason to think that. It's a low market cap coin. It's, of course, they're very narrative driven. They all have a story. They all have, a reason for why their team is the best. But a lot of the times you just need to shake out every participant, because when you have people that bought here and price falls through their level, they're going to be selling at the return back to this level. And they'll think, okay, I'll get flat and I'll wait for this to recover. People that buy here, price nukes through their level, price returns, they sell now. So it just becomes this, and I think Suzu shared this roller coaster of death all the way down, right? Until it just completely flatlines. And, sign of flatlining is this prolonged bottom, right? Prolonged bottom that begins to rise on lower volume, right? Begins to accept higher prices without as much effort, and you just don't see as much selling anymore, right? You look at the wallets, you look at the fact that most of the larger whales, I was a pretty large person in this, are out, okay? They have been shaken out. The people that are getting involved right now are, I think, they're better longer term holders, okay, because we've seen this incremental growth. So the fact that price has respected this floor now, going back to November, the fact that this is now starting to shape up at the right time. So it's always a matter of is it the right time? It might be a good looking chart, but it might be a really poor position with regard to the greater crypto landscape. So I think that right now it's setting up as far as good timing goes. So yeah, I started building a position back here. And I think that it's, again, that this is going to be something that might correct a couple times, but I could see the fact that this is starting to look like a really attractive chart right now, and the fact that it's on the cusp of what might be a larger DeFi run in alt season. And I think, end of January, February, I could see this really running. It's, I don't know enough about fundamentals to sit here and act like I could talk about Shroom for, the next few hours, but I know a few smart people that do. And it's a low market cap coin. It's a low supply coin, Right now it's shared by many, so it's not like there's just a few whales that share a majority of it. So I think that it's an attractive alt play for the next 2 months. So I'll be staying in this, right? And I'll still be accumulating more of this as the opportunities arise. So this is what I wanted to touch on because, again, I get asked about it all the time, and I did start getting back into position. I don't have my full position yet, but I think that over the coming weeks I'll be geared up for any kind of potential alt and DeFi run, and I think this will be one of the bigger beneficiaries of that. All right, so let's look at some charts. So Shroom, you have to go on to Uniswap, you have to go on to 1inch. It's not on any major exchanges yet. So let's look at some pairs. We're an hour and 15 minutes into this. BTC is all over CNBC. Another reason to kind of be a little bit cautious. DOT. So yeah, DOT, awesome move with DOT. So DOT, ETH showing up at the same time with moves against BTC. So this is one of the first things you want to see, right? You want to see strength against BTC. So strength against BTC, rising against BTC, above prior lows, prior highs, starting to shape up like maybe we have a reversal, right? Maybe we're starting to see the sparks of a longer run with DOT, right? And the same thing with other alts as well, starting to perform better against BTC as compared to what they were doing recently. So if we look at DOT versus more recent daily clusters, okay, these are the areas I would say should act as support, right? If you get some type of major pullback, I would want to see that, your 540 or 550 level, and it could go all the way up to 576, right? This general area should act as support moving forward, and it's a pretty big area, right? But it's an altcoin, so it's going to have a good amount of dispersion. It's going to move a lot more than something like BTC. But this is a high volume move, right? A high volume move above previous levels within market structure. So DOT is, I think DOT is shaping up to go on a pretty nice run. As long as the rest of the market remains healthy, DOT is a newer asset, which makes it very attractive, right? And the whole DOT ecosystem. Let's see. Okay. Go through some charts. ETH versus BTC. This is looking better now, right? Here is, just some of the criteria we go off of. So the previous weekly levels. Okay, we nuked through them, but now back above them. So that's great. That's your blue line right there. It's your weekly cluster. So back above here, you want to look for support to form. All right, and this is a really nice pattern right here. You have this sort of under-over that's setting up on the higher time frame, and that's around 0.026204 against BTC. So 26,204. So right here, you would want to see this act as support. Just the idea that we've reclaimed prior structural lows, and again, this is on the daily, and if you zoom back, this is a significant area within market structure. So if we look at ETH USD, is there a case to be made for ETH USD catching up to BTC? I think absolutely. So this doesn't look like it wants to stop after this move, honestly. I think that 800 is a really reasonable first target, but I would say that there's been sort of a question whether or not ETH follows or BTC follows. I think ETH follows. And I think that I think it's completely within reason to see a $1,000 ETH in the near future. ETH as a network, the gas prices sucks, but people FOMOing into ETH thinking that it's going to catch up to BTC can make this move happen pretty quickly. And it doesn't really show signs right now that it's not showing signs of weakness. You have a period of higher highs, higher lows, a lot of compression here, now finally getting a breakout to the upside. Mind you, you could get the breakout and then this come back down and correct, but the only thing that I would want to see is that right now, the higher time frame support levels, it's kind of thin up here, same as Bitcoin, right? Kind of thin, kind of extended. But if we look at this whole pocket as being a little range that we had developed, I'd say 620 and above, you want to see act as support. So 617, I have that listed as the daily, and that was just this original daily high back here. You have to move up, retest back down. You would want to see that basically we maintain for an area that might be an attractive pullback opportunity, that 617 to 650, sort of 661, it's coming up as, with this little pocket, right? So this is looking good. looking good. On the low time frame, begin to tail off, so we'll see. But I think that ETH is on its way up to much higher prices. Itchy nose again. Digibyte, haven't heard about it in forever. I think that all the other stuff that's old is, if it's not moving up right now, it's irrelevant. I'll look up Digibyte though for you, rather than just talk shit about it without looking at it. I can't even, let's see. It's not even on any major exchanges. It's on Bittrex. It's probably done, man. It doesn't look like anything to me. It just looks like your standard pump and dump. I mean, yeah, you could say that on the higher time frame, it's above a weekly level right here. This now is a little shift in market structure. This should act as support, but I wouldn't get your hopes up. There's a lot of old stuff that I think is just completely irrelevant at this point. Xcoin, never even heard of it. Let's see. Doesn't even come up. That's that. SNX. Oh, SNX, of course. SNX is one of my bigger positions. I think SNX is good as long as you maintain the current trend. So 732 is a weekly high. Okay, it's also your daily high. Chopping around here wouldn't bother me. Like I said the other day, anything between here and here, I think is a good buy. If you get it, I think it's a good buy opportunity. You know, that's if you get it, right? If you look at this trend on the high time frame, it's just been trucking along. Previous daily highs, significant move through. This had a quicker response out. There's a little bit more of a, come on, Jesus. It's a little bit more of a choppy behavior up here, but which makes me think maybe you do get more of a, I don't know, a muddy response to this support and resistance flip. But there's no reason why I think that this as a DeFi blue chip now, and just look at this candle through this level. I don't think you see this turn. Might chop, it's fine. I think same thing with Aave. Aave underperforming recently, but Aave I think on the higher time frame is just on the same path. Things were underperforming BTC recently. I don't think it's that relevant if it's a DeFi blue chip. I think it was to be expected. So SNX, very confident in. SNX, I could easily see a $20 SNX, a $50 SNX based on just market cap alone and what they're doing. LTC looking really good lately and becoming quite popular again. So if we look at LTC versus the weekly chart, this is into an important level down here. Not all the way down there though, but fine, it's working out. Previous weekly levels, little flip we had. So support, nuked it, resistance, now breaking back up as support. Maybe you get some a little bit more sideways action, but this looks like it's putting in a reversal against BTC. So starting to outperform again. Mind you, that's against BTC. If we look at the USD chart, it's a little bit more extended. So you're decently above any more recent weekly levels. So back down around 94 and 80. I don't know how, I don't know if it's safe to expect large pullbacks. I mean, excuse me. I think that it's safe to expect large pullbacks at some point, but it's dangerous to just expect that because it's been technically driven for so long that we have to come back and give this kind of retest. We are at resistance though, so bear that in mind. You either get something that looks like this, breaks out and above and maintains this as support, or you get some type of support that forms, but maybe it forms within these two levels rather than what my point is coming back all the way down here and giving us that sort of textbook retest. So I think that if you begin to pull back and you see that there's somewhat of a bottoming structure, let's say you do one of these over-unders, then I think that LTC is a long and that this is just playing out longer and that, yeah, we're going to follow the rest of the market up. So I don't know if you guys see what people write ahead of you, but if someone writes SNX, you don't have to write it. I went over ETH BTC. GRT, lower time frame. Yeah, because that's all you can look at now, right? Because GRT is just straight up. This thing went up, what, 2,200%? 25? I would just be really careful about buying things that are this overextended because, and become this popular this fast. You just have a ton of long exposure. And as soon as things start to lose a little bit of support, it could get ugly really fast with these new pairs, even if it's a perfect timing for the market. I mean, if you look at this on the daily chart, you really don't have much. But let's mark it out anyway. 4-hour chart. It's very clearly support. All right, little flip. Yeah, I don't know if I'd want to be a buyer in this until it's back above a significant daily level. You know, and then it's still a very risky play at this stage. But back above this, and then maybe target the highs again, which are around 75 cents. But I wouldn't want to be, I don't know, I wouldn't want to, there's so many other things to pay attention to. I don't know enough about this. I have to look into it, see if maybe there's a better play that's more fundamental driven that I'm just missing out on. But this is, you know, it's sitting in a precarious spot. There are people that are, their cost basis is ridiculously attractive and don't care if they sell here or here, right? If you got involved down here, it doesn't matter if you sell here or here, right? You're still sitting very, you know, in a very pretty spot. So be careful about that, because that means that if you have people that are early, they don't mind selling in a really bad spot, which can help fuel the move down. Theta, just too overextended. I won't even really dwell on that because I know Theta has put in a ridiculous move to the upside. Looking like BTC now on the lower time frames. But it is quite extended from the last consolidation. I think that alts do give you, more often than not, do give you really nice technical setups. You have this little support and resistance flip right around 150. So if you can maintain this, maybe you're playing back up to right around, it's tight, but the highs around 174. So, but this on the high time frame, I wouldn't really want to get involved in it yet because it's just very, it's extended. No, I'm not going to, Yash, I don't tell people if they should buy things. Celsius. Against BTC first. Looking really ugly. Completely underperforming BTC. Lost all structure. Retrace the entire move up. If this thing fucking gets locked in this one more time, I'm going to flip out. I don't, you know, looking at this against USD almost makes no sense because it's completely underperforming everything worth being in right now. So we basing out right here. Looking at the weekly structure on the way down. More local, I gotta lock this. I mean, I guess you could make a case for claiming these highs. So I wouldn't want to go off of this little flip right here. I'd rather see that this consolidation after this little flip above here, above 581, something like that. Yeah, maybe offers you a play to 1050, but this is just completely underperforming BTC, so it doesn't make sense to really pay attention to it too much. Do you ever pay attention to on-chain analytics? No, I don't really. I think that people in crypto, especially newer traders, they try to focus on every little detail. I don't think that you could put them all together in the best way as you can when you're looking at just a few things. You get into analysis paralysis, you overanalyze every little change in on-chain data and in the chart, and when I see people use too many things, I kind of feel like there's no way that they're a profitable trader and they do that. Just in my experience, you can't pay attention to too many things. So I don't pay too much attention to any on-chain analytics. I let the smarter people do that. Sushi. Okay. Let's see. Sushi is I think sushi, so just to be clear, transparent, I think sushi is going to be one of the better performing assets of the next cycle. If you just look at how this was bid up after this ridiculous wick, I think that it speaks volumes. Previous structure before this major correction on the way up, right? Very clean structure, a little bit muddy over here where you violate the previous high. That's fine though. As I said, I expected this might go through a longer period of consolidation over here, but still continue upward nevertheless. This is, I think this is taking a one-way trip with a lot of the other DeFi stuff. I wouldn't want to lose these lows, right? I don't know if I would want to really fall back below any of the prior structure that now we're kind of reaccepted back within. So if we go back here, you can see how quick this was bid up. You don't want to come back here and test that bid again. But I think sushi looks good. I looked at shroom already. Okay. Man, you guys don't read the chat because some of you guys asked the same thing that like 5 people above you asked. Okay. Let's see. Wrong cell. No, I'll check. Let's see. Let me look at Zill for my dude Brian. Zill I went over in the last 2 streams. Was super strong. I mean, this is a awesome chart against BTC, which is exactly what you want to see in this kind of market regime. Just nuking through prior highs against BTC. So we have one of the first signs, obviously, of a market that's completely recovered against Bitcoin. That's fantastic. Against BTC, the levels I would definitely want to hold is 247 weekly level. So that looks awesome right now. Respecting this on the daily high respected. So far seeing all the signs against BTC that we would want to see. ZIL USD, since a lot of people trade this against the dollar. Let's look at this. You know, the best place to get involved would be the best support and resistance flip was back here. Resistance, 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 big move down, V reversal, resistance, and then a flip. So, I mean, this is, it's one thing you could say, oh, this is super bullish, but at the same time, are you in a good area to define a position? You have to be really confident in this to now take a position, hoping that it has a lot more movement to the upside. I think that ZIL can easily be back at its highs of previous bull markets, right, or the previous bull market. I would, you know, say that the area that really defines it right now is down here. So just keep that in mind. Like, if you're defining what makes this bullish and what makes it bearish, it's really far from where we currently are. So price can come all the way back here and it not be invalidated. So if you're getting in position up here, just keep that in mind. But this looks great. Sell. So what do we want to look up? Celsius. On hit BTC. Yeah, that's definitely a different chart. Kind of vertical against Bitcoin, exactly what we want to see before you even look at the USD chart. So that's great. Looking at this consolidation right here at 14,000 as the high, you would want to see that to support. So that's moving against Bitcoin right now to the upside. I want to see a USD chart. Is there any longer term chart to look at? Because otherwise these things you look at and it's like, oh, you just want to ape in then. Where is it? Oh, that was that the USD? No, seller. Where the fuck is it? Celsius, US dollar. There we go. All right. Yeah, that's straight up, man. Not in the best position to put on a position, right? Look at the moving averages on this. Oh, I took off the 20, but we'll put the Bollinger Bands on. It's the same thing. Really extended from the 20 period right now. I would say, hey, if you want ideas of where to get involved in a strong trend, you come back down to the 20 and you get involved. Right? That's a good area to get involved. Or if you start to see these compress again, right? If you get compression again, you're probably back down at the 20 at that point anyway. But this looks great. I can't say anything with regards to structure because it's already so overextended. You know, the next area of support is back down around 240. Oh, one sec. All right. Yeah, so just joined, reach 28K anytime soon again. Yeah, sure. I mean, why not? I would watch the beginning of the video. I went over that in the beginning, so if you want to watch the beginning of the video, that'd be cool. Let's see, any other things in the chat? All right, so just to reiterate, and then I'll ask the 0.01 BTC question. I'm going to pull one off the top of my head, so whoever's fastest wins. Again, looking at this inside day setup. So today, inside yesterday, but for me, most importantly, I don't care about the close of the open. We're inside yesterday's value area, and yesterday was kind of symmetrical, kind of balanced day. And this day is now the first day of value overlap. So value area, X within larger X, right? If you get the move above 27,671, might give a breakout opportunity back up to the high. I'll put a trigger trailing stop on. If in case this gets away, I'll be able to ride it, ideally, right? Or it'll nuke through really fast and I'll slip all the way back down. And then if we move back to any one of, let's say we move back down to yesterday's value area low or weekly open, any reclaim of the structure within these structures is setting up long opportunities. So it's very clean, right? A lot of the trading opportunities are really clean lately in that, let's say you have, like yesterday, you have very cleanly defined structural swing points, price nukes through, retest the underside of this, and the first time that you're gaining reacceptance back within the lows, so if you got aggressive early, it was right here, but a lot of the times you're seeing plays just right back up to the high. In this case, it was VWAP yesterday. I shared that in the Discord. But any kind of strength in price action where you're seeing short-term reversals, I think that they're just awesome trading opportunities. So let's say that, for example, this low. We're focused on this low. It's previous day's value area. All right. Let's say we break down, spike again, and then we're trading back above, but we have something that looks more like low, low, and then you're doing something like this. I think that these are all long opportunities, right? Back to the next sticky point. So they might be $200, $300 trades, but they're all worth taking, I think. So, all right, so let me ask a question real quick. Okay, this is going to be the first person who answers it correctly wins 0.01 BTC. Okay, so again, it's the first person. The first person that pops up in the chat will win the Bitcoin, right? So again, I don't, it's as fair as possible. I don't know how to put that any better. Let me think of something real quick. Okay, this is going to be math related. Some quick thinking will be rewarded. Okay, what is 150 divided by a half? What is 150 divided by a half? So I think it's important to understand math for one, especially when you're trading and investing. You more so want to understand the importance of compounding, but and percentages. But let's just test the math skills real quick. So what is 150 divided by a half? So if you have to pull a calculator out right now, you're probably going to be slower anyway. Okay. 150 divided by a half. Good stuff. Why is everyone saying 75? Ah, Yeah. Okay. So that's a fast response, guys. So Jammers got it right off the right out of the gate. So 150 divided by a half. 150 times a half multiplied by a half, or halved, would be 75. But divided by a half, it's the opposite. All right. So 150 divided by a half is 300. Good job. That was fast. I just pulled that right off the top of my head. So, so Jammers got it. Okay. Because they're intense. All right, Jammers. So do me a favor. Message me on Twitter. Send me a direct message, and I will send you that BTC today. I'm happy that most of you. So most of you got it, and then most of you went for the. I think your brain short circuited a little too fast and immediately thought of 0.5 of or half of 300. It's divided by. So, all right, guys. Of 150, excuse me. All right, good stuff. Okay, guys. So that's that. So Bitcoin for me is kind of, as far as intraday setups, we have the inside day setup. The trend on the higher time frame is pretty overextended. Looking at futures right now, they're trading more closely in line. So you could see Coinbase and futures are back to around a $15 premium, but it was quite overextended for a little while there. So there was a pretty consistent premium between the futures and the spot market. So that's something to be mindful of. If we look at this on the higher time frame, we're pretty overextended from even our, our average moving averages. I want to say that because the 20 is more common moving averages. Pretty extended from the 20. RSI is overbought, but again, just keep that in consideration with that, or rather take into consideration that it is it's just a derivative of actual candle movement. And in this context, it could continue to be overbought. It doesn't mean anything. It doesn't mean that it has to turn away. So that's that. If you're not already trading on Phemex and you want to try it out, go to Phemex.trade. Those are our partners. You get a discount if you use that link. And then Shroom is the new thing that I'm getting back involved in. So that's exciting. I think that over the next month and a half that a lot of DeFi alts do exceptionally well. So cool. Who won again? What was the name? So I know. It was Jammers. All right, Jammers. Send me a message. Until then, guys, everyone have a fantastic week. I'll see you on Wednesday where we just get right into the lower time frame stuff with Bitcoin.